Right now, while you are reading this, something is happening in the financial world that most ordinary people have absolutely no idea about. And by the time they find out, it will already be too late for them to do anything about it. That is not a scare tactic. That is just the painful pattern of how money has always worked throughout history. The few who know win, the many who ignore lose. If you're interested in money, finance, or changing your financial future, like this video and subscribe right now, because what you are about to learn can change the way you see money forever. So let me ask you something honest. When was the last time you felt genuinely confident about your financial future? Not just, okay, I have a job, I have some savings, but truly confident. Like you knew you were building something real, something solid, something that would still be worth something 5 or 10 years from now. For most people, that feeling does not exist. And I think deep down you already know why. Because the money in your bank account, the salary you work so hard for, the savings you are slowly building, they are all losing value every single day. Quietly, invisibly. Like a slow leak in a tire you cannot see but eventually strands you on the side of the road. That slow leak has a name. It is called inflation. And while you have been working, paying bills, trying to save a little here and there, inflation has been silently eating away at the purchasing power of every single dollar, pound, or rupee sitting in your account. But here is what makes this moment different from any other time in recent history. Something is happening with silver, a metal most people have completely ignored. That is making financial analysts, commodities experts, and some of the most careful investors in the world sit up and pay very close attention. Some of them are now saying the words that sound almost impossible. Silver could reach $370 per ounce. Now, before you roll your eyes or click away, I need you to stay with me. Because this is not about getting rich overnight. This is not a crypto hype story or some fantasy investment pitch. This is about understanding a real shift in global money, in industrial demand, in the way the world actually works right now, and why ordinary people exactly like you, have a window of opportunity right now that may not stay open much longer. Let me take you back to something that happened not too long ago, because the story of silver's potential explosion actually starts in a place most people would never expect. It starts in your phone, the one you're probably holding right now or have sitting next to you. Inside that phone, there is a tiny amount of silver. Not a lot, maybe a fraction of a gram. But here's the thing. There are over 8 billion people on this planet, and billions of them own smartphones. Billions more are getting them every year as developing countries grow their middle classes. Every single one of those phones contains silver. And that is just phones. Think about electric vehicles, solar panels, medical devices, semiconductors, advanced military technology. All of them use silver. All of them need more silver every year. And the supply of silver, the amount being mined from the earth, has not kept up, not even close. But what happened next, when people started realizing this supply and demand imbalance, changed the entire conversation around silver as an investment. Let me paint you a picture of a regular person. Call him Tariq. Tariq is 28 years old, works a decent job, makes a reasonable salary, and does what most people his age do. He spends on rent, food, maybe a streaming subscription or two, tries to save a little at the end of the month. Tariq is not irresponsible. He's actually pretty careful with money. But Tariq has never thought much about silver. Why would he? Nobody in his family talked about it. His school never mentioned it. His friends talk about stocks sometimes, maybe crypto when the prices are going up. But silver? That sounds like something your grandfather kept in a drawer somewhere. What Tariq does not realize, and this is the part that genuinely hurts when you understand it, is that the money he is saving, the little he manages to put away each month, is sitting in a bank account earning maybe 1 or 2% interest while inflation is quietly running at 4. 5, sometimes 6 or 7% in different parts of the world. So every year, even though his bank balance might look slightly bigger, his actual purchasing power, what that money can buy, is getting smaller. He is running on a treadmill, working hard, going nowhere, and he does not even know it. This is where most people fail without even realizing it. They confuse having money with building wealth. These are two completely different things. So let us talk about what wealth actually means, in plain terms. Wealth is not just numbers in a bank account. Wealth is stored value, something that holds its purchasing power over time, or better yet, grows. For thousands of years, before paper money existed, before digital banking, before credit cards, human civilization used precious metals, gold and silver, as the ultimate stores of value. And this is not ancient history trivia. This is deeply important context for what is happening right now. Throughout history, every single time a civilization has printed too much money, every time governments have created currency out of thin air to pay their debts, the value of that currency has eventually collapsed, every time, without a single exception. Ancient Rome did it with their coins. The Weimar Republic in Germany did it in the 1920s. And people literally burned paper money because it was cheaper than firewood. Zimbabwe did it. Venezuela did it. And right now, governments all around the world have been printing money at a scale that would have been considered science fiction just 20 years ago. The United States alone added more money to its supply between 2020 and 2022 than it had printed in its entire previous history combined. Let that sink in for a moment. And here is where silver enters the picture in a way that most mainstream financial media completely ignores. When paper money loses its value, and historically it always does eventually, people rush toward real, tangible assets, land, gold, and silver. These are things that cannot be printed. They cannot be created by a government decision or computer algorithm. They exist in fixed quantities on this earth, and the only way to get more of them is to dig them out of the ground at great expense. That scarcity is exactly what gives them enduring value. And right now, silver sits at a very interesting crossroads. It is both a precious metal that protects against inflation and an industrial metal with explosive modern demand. That combination is extraordinarily rare, and it may be setting up for something that most ordinary people are going to miss completely. Now, I promised I would explain why some serious analysts are putting a price target of $370 on silver, and I will. But first, you need to understand something that almost nobody talks about in the mainstream news. Because if you do not understand this next part, the price target will just sound like a random number someone made up. Silver has something called the gold to silver ratio. It sounds technical, but it is actually beautifully simple. The ratio just tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, over thousands of years, this ratio has averaged around 15 to 1, meaning 1 ounce of gold was worth about 15 ounces of silver. This ratio was actually legally set at 16 to 1 in the United States for a significant part of its early history. Why? Because that is roughly how much more rare gold is compared to silver in the Earth's crust. Nature created about 15 to 16 times more silver than gold, so the market priced them roughly that way. But here is where it gets genuinely shocking. Right now, as you are watching this video, the gold to silver ratio is sitting somewhere around 80 to 1. 80. That means it takes 80 ounces of silver to buy 1 ounce of gold. Think about what that means. Silver is massively, historically undervalued relative to gold. If the ratio were to simply return to its historical average, not some extreme or optimistic scenario, just return to normal, and gold stays where it is, silver would need to multiply in price several times over just to get back to where it should be. That is not speculation. That is math. That is history. And that is why serious people are talking about $370. And nobody talks about this part. Not the financial news. Not the mainstream investment advice channels. Because silver is not glamorous. It does not make headlines. It does not trend on social media. It just quietly sits there, historically undervalued, while most people scroll past it, looking for the next big thing. But let us go even deeper, because the industrial demand story for silver is arguably even more powerful than the monetary store of value story. And the combination of both happening at the same time is what makes this moment potentially extraordinary. Think about the green energy transition. Every major government in the world, Europe, the United States, China, India, the Middle East, has committed to massive renewable energy expansion. Solar panels are at the heart of that transition. And here is something that will genuinely surprise you. Every single solar panel ever made requires silver. Silver is used in the photovoltaic cells that actually capture sunlight and convert it to electricity. It is not optional. There is currently no substitute that works as well. And the scale of solar panel production that the world has committed to over the next decade is almost incomprehensible. Hundreds of millions of panels, billions of panels, each one needing silver. Now layer on electric vehicles. The average electric vehicle uses roughly twice as much silver as a traditional combustion engine car, and the world is in the middle of the biggest automotive transition in a century. Every year, tens of millions more electric vehicles hit the roads. Every year, that demand for silver grows. And then, remember what I said about phones and semiconductors and medical devices. Silver is antibacterial. It is used in wound dressings and water purification, in advanced surgical equipment. As the global population grows and develops, medical demand for silver grows too. The demand picture for silver is not one trend. It is 5 or 6 massive trends, all pulling in the same direction at the same time. But what happened next in the supply picture is what really started making financial analysts nervous. While demand has been growing steadily, silver mining has been facing serious challenges. Many of the world's largest silver mines are aging. The highest quality deposits, the ones closest to the surface, the easiest and cheapest to mine, have largely already been extracted over the past century. New silver discoveries are becoming rarer. New mines take 10 to 15 years to go from discovery to production. And significantly, a lot of silver is not mined directly. It comes as a byproduct of copper and zinc mining. So silver supply is partly dependent on the economics of those other metals too. The result is that for several consecutive years, the world has been consuming more silver than it is mining. That gap, called a supply deficit, has been filled by drawing down existing stockpiles. But those stockpiles are not infinite, and some analysts believe we may be getting to the point where that cushion runs out. This is where everything changes. When a commodity has strong and growing demand, constrained supply, and a massive historical undervaluation relative to its monetary peer, you have the ingredients for a significant price move. Whether it goes to $370 or some other number, the directional argument that silver has significant upside from where it trades today is not fringe thinking. It is something worth understanding, even if you approach it with healthy skepticism. Now let me bring this back to you, back to Tariq, back to real life, because understanding all of this is one thing. What you actually do with it is another. Here is the reality that most personal finance content will never tell you, because it is not comfortable to hear. If you are a normal working person, living paycheck to paycheck, or maybe a little better than that, saving slowly, the traditional financial system is not designed to make you wealthy. It is designed to make you comfortable enough to keep working and spending. Banks earn money by lending out your deposits at high interest rates while paying you almost nothing. Governments need consumer spending to keep the economy moving. So they subtly discourage hoarding money or saving too aggressively. The entire structure of modern finance, if you're honest about it, tends to transfer wealth slowly and invisibly from ordinary savers to asset holders. What is an asset holder? It is someone who owns things that go up in value over time. Real estate, stocks, gold, silver, business equity. People who hold assets accumulate wealth even while sleeping because their assets appreciate. People who hold only cash savings slowly lose ground to inflation. This is not a conspiracy theory. It is just the structural reality of how money works. And the first step to changing your financial trajectory is simply to understand this reality clearly. Most people never realize this part. You do not have to be rich to start holding real assets. Silver, for example, is one of the most accessible hard assets in existence. Unlike gold, which can cost over $2,000 for a single ounce, silver can be purchased in small quantities, a coin here, a small bar there, for amounts that even a student or a young person just starting out can afford. The point is not to go all in on one thing. The point is to start understanding that your savings need to work for you, not just sit there while inflation quietly destroys them. And here is an uncomfortable truth that applies to almost everyone watching this video. If you have been saving diligently for the past 5 years and keeping your money in a regular savings account, the purchasing power of those savings is likely lower today than when you started. Even if the number looks bigger, that is not your fault. Nobody taught you this. It is not covered in school. It is not something the banks are eager to explain, but it is critically important that you understand it because awareness is the first step to doing something about it. Now, I want to talk about something that most financial videos never discuss honestly, and that is risk. Because if I sat here and told you that silver is going to $370, no question, guaranteed, pack your bags, I would be lying to you. And you deserve better than that. Nobody knows exactly what silver will do in the short term. Markets are influenced by emotions, by geopolitics, by policy decisions, by events that nobody can predict. Silver can be volatile. It has had periods where its price dropped significantly before recovering. If you are looking to get rich in 60 days, silver is probably not your answer. But here is what separates short-term speculation from long-term wealth building. The fundamentals I have described to you, the industrial demand, the supply constraints, the historical undervaluation, the inflation protection, those do not go away because silver has a rough month or a rough year. If the underlying logic is sound, time tends to reward the patient investor who understood the big picture before everyone else did. That is actually how most real wealth gets built. Not in flashy moments of overnight success, but in quiet, consistent decisions made when most people are not paying attention. And right now, most people are not paying attention to silver, which is exactly the point. Let me share a thought experiment with you. Imagine it is 10 years ago. Someone sat you down and said, look, electric vehicles are going to go from being a curiosity to millions and millions of cars on the road within a decade. Every single one of them needs certain materials to build. The demand is going to be enormous. Would you have paid attention? Would you have taken some action, even a small one, to position yourself ahead of that trend? Most people who heard that kind of analysis back then dismissed it. Too early, they said, too speculative. And then they watched from the sidelines as the people who did pay attention built significant wealth. The silver story today has similar characteristics, not identical. Nothing ever repeats exactly. But the structure is similar, a massive, undeniable industrial shift creating demand for a specific commodity. A supply picture that cannot easily or quickly respond to that demand. A historical valuation framework that suggests the price has significant room to move. And most of the world's ordinary investors not paying attention yet. But what happened the last time silver had a major bull run is worth understanding. because it shows you both the potential and the volatility of this market. In 2011, silver reached nearly $50 per ounce. That was an extraordinary run from under $5 just a decade earlier. People who had quietly positioned themselves in silver in the early 2000s made extraordinary returns. But then silver fell sharply from that peak, all the way back down to the teens and low 20s for years afterward. The people who bought at the peak, chasing the excitement and the headlines, got hurt. The people who had bought years earlier, based on fundamental analysis rather than hype, largely came out well, even through that correction. The lesson is not that silver is always a winner. The lesson is that understanding why you're buying something and having a time horizon that matches the fundamentals is what separates investing from gambling. And right now, the fundamentals for silver, the industrial demand, the green energy transition, the monetary undervaluation, the supply constraints, are arguably stronger and more multidimensional than they were even in 2011, which is why some of the most careful, most data-driven analysts in the commodities space are using words and price targets that would have sounded extreme not long ago. $370 per ounce is a number that assumes several things coming together: a continued decline in the purchasing power of major currencies, a sustained surge in industrial demand driven by green energy and technology, a supply deficit that deepens over time, and a reversion of the gold to silver ratio toward historical norms. None of those things are guaranteed to happen on any particular timeline, but the direction of all those forces is pointing the same way. And the question is not whether any individual person should put everything they own into silver tomorrow. The question is whether ordinary people, like you and Tariq, even know this conversation is happening, and whether they are equipped to make an informed decision about their financial future. Because here is something that is genuinely true about wealth. The biggest financial wins in most people's lives do not come from working harder. They come from understanding something important before most other people do, and positioning themselves accordingly, even in small, modest ways that compound over time. The people who built generational wealth from real estate did not invent real estate. They just understood it and acted on that understanding. The people who built wealth in the stock market did not create publicly listed companies. They just understood the principle of owning pieces of businesses that grow over time. Understanding comes first, action comes second, and timing, getting there before the crowd, amplifies everything. Right now, the crowd is not looking at silver. The crowd is chasing whatever went up last week, whatever is trending on social media, whatever the most exciting story of the moment happens to be. And while the crowd chases noise, the quiet, fundamental story of silver builds underneath the surface. Let me bring everything together for you, because I want this to be genuinely useful, not just interesting. You are living in a time when the value of paper money is being questioned at a deeper level than it has been in decades. Governments worldwide have taken on debt that would have been unthinkable to previous generations, and the mechanism for managing that debt has consistently involved printing more money, which dilutes the value of every unit of currency that already exists. That is happening right now, and it is not a political opinion. It is a mathematical fact that you can verify by looking at any central bank's balance sheet. You are also living through the greatest transformation of industrial infrastructure in a century as the global economy transitions toward electric energy, renewable power, and advanced technology, all of which have silver at their core. And you are living in a moment when silver's price relative to gold is at one of its most extreme historical undervaluations, suggesting that markets have not yet fully priced in either the monetary or the industrial case for silver. Now I'm not here to tell you what to do. That is not my place, and this is not financial advice. What you do with your money is your own decision, and every situation is different. What I am here to do is make sure you are aware, that you understand the conversation that is happening in the financial world around silver, that you know the arguments being made, the data being analyzed, and the historical patterns being compared. Because an informed person making their own decision is always better than an uninformed person being surprised by events they never saw coming. Tariq, the 28-year-old we talked about earlier, eventually stumbled onto this kind of information, not because he was financially sophisticated, not because he had a mentor or a rich family member to guide him, but because he got curious, started asking questions, started learning about how money actually works beneath the surface of what school taught him. And that curiosity, that decision to learn rather than ignore, was the turning point. Not some massive investment decision, not a windfall or a lucky break, just the decision to understand the world of money a little more clearly. That decision is available to every single person watching this video right now. The world is not going to wait for you to feel ready. Markets do not pause while you get comfortable. The forces reshaping the global economy, inflation, industrial transition, currency devaluation, commodity cycles, are already in motion. You cannot stop them or slow them down, but you can understand them. You can position yourself, even in small and modest ways, to be on the right side of these shifts rather than the side that wakes up in 5 years, wondering where all the value went. The $370 silver target is not a number you should tattoo on your brain as a guaranteed destination. It is a signal that serious, data-driven people who study commodities for a living see enough evidence in the fundamentals to make that projection. Whether they are right about the exact number or the exact timeline, the underlying story they are telling deserves your attention. Because you deserve to know about it. Because nobody else in your daily life is probably telling you about it. And because the cost of understanding something true is zero, while the cost of staying ignorant can be enormous. Here is the final question I want to leave you with. And I want you to sit with it honestly for a moment, because it is not a comfortable question. 5 years from now, when you look back at this period in history, the inflation, the industrial transformation, the extraordinary monetary experiment being run by governments around the world, how do you want to have responded to it? Do you want to look back and say you were aware? You were curious? You took the time to understand what was happening and made thoughtful decisions? Or do you want to look back and realize you knew something important was going on? You felt the uneasy sense that the old rules of money were changing, but you scrolled past it. You told yourself it was too complicated. You decided to deal with it later. Later has a way of becoming never, and never has a way of becoming regret. The information you receive today is real. The historical patterns are documented. The industrial demand is measurable. The supply constraints are verifiable. The gold to silver ratio is a number anyone can look up. None of this is hidden or secret. It is just overlooked. And the difference between people who build financial resilience and people who do not is rarely intelligence or income. It is almost always awareness, the willingness to look at things most people ignore, the discipline to learn what most people find boring, the patience to act on what you understand before the crowd catches up. You now know about silver in a way that most people do not. What you do with that knowledge is entirely up to you, but the opportunity is real, the moment is now, and the choice, as always, belongs to you. If you learned something new today, make sure to subscribe to Money Insights and like this video. More powerful financial truths are coming next.